Great, we're live. Jalak, thank you so much for being here with us. There's been a bit of back and forth, but I'm glad that we could make this happen. I first came across Future Perfect Ventures and your profile when we were doing the T Block Accelerator, which was India's first government-facing public blockchain accelerator, which it's a first, and I hope there are many. But at the time, I was quite surprised that you've been around for, I think, roundabout when blockchain was actually becoming a thing. And you've been flying so under the radar quite honestly. But then as I got to kind of knowing a little more about you, you've got one of the most illustrious venture backgrounds as anybody else out there. So it's our honor to host you here, and thank you so much for making it.
Well, thanks for having me. I'm looking forward to the conversation.
Awesome. So we'll get right into it. I had prepared a list of questions, but we'll start with a simple one. Generally, what I've noticed is that strong Type A personalities go to like proper B schools, and then get in as analysts at large investment firms, and then get into the space. I've always wondered, how much of what you learned at college and college itself contributed to the career that you had after. And now I think you'd have enough time to kind of look back into it. What are your thoughts on that? Did college really help getting you to where you are right now, or was it one of those incidental things that you had to do just because everybody else was doing it?
Well, so I'll provide some context on my background. I was born in Kenya, Indian origin, and moved over to the US when I was very young. So my parents were immigrants. I went to public schools in the US, which is an anomaly in itself in the venture capital industry, and was never really exposed to the business world growing up. And I was a more creative type. I got into dancing and ballet, and as my mom asked, "What do American girls do?" and the neighbor said, "Put her in ballet," and I ended up being a pretty serious dancer. And so for me, college was pivotal in that I ended up going to Penn. I think I was one of the first, if not the first person from my high school ever to go to an Ivy League school in the US. And that's when I took my first economics class. I thought I was going to be an English major. And so I think the answer is college for you, or do you get anything out of it, is really a very personal question. For me, it was so important because I'd never been exposed to business before and I never thought of it as a career. And it was at college that I was able to do that. Other people, built their networks there, and I certainly built my network. If I look back, a lot of my investors and good friends are actually from those days, and there's something special about when you all start out together and you really get to know people on a personal basis, and not to do with any networking. I think those are really trusted relationships that last for a while. But that being said, there are other ways to get there. And I know people who do startups or get involved in tech communities who kind of build the same thing. So I would just say to anyone, it's, whatever situation you're in, make the most of it, and connect with people whose values you connect with, because at the end of the day, that's what creates the basis for a strong career going forward.
Nice. That's a different perspective, and usually this is one of the first questions that I ask an investor VC who spent time in this, and I'm getting different answers all the time. So
Yeah.
thank you for that. I've seen a lot of your interviews outside where you say that you felt this sense of excitement in the Bitcoin conference that you were there in 2013. What most people don't ask you is that you've also been there at the beginning of the dot-com bubble as well. What did that feel like? And what were those telltale signs that made you think that, okay, this is something that could really be big? And you were in technology investing as well around the same time, so you're one of the early people. So I'm curious to know, what were those signs that just stood out for you, and you thought that this is something that you should kind of delve deeper into.
Yeah, and it's interesting you said my answer is different than what you've heard before, because I'm if I look back, most of my decisions have been very kind of contrarian or against what other people advised me to do, and so and really that's a story of getting involved in tech really early, getting involved in the Bitcoin sector really early. So again, I'm going to go back to my background and my perspective. So after we moved to the U.S., I was we went back to Africa and India, and I saw in the 1980s how little connectivity there was in a lot of these emerging markets, very different than right now. And I knew I wanted to get involved in a career that involved creating more connectivity. And I was thinking of educational opportunities, access to information. And that's one of the reasons I applied to college as an English major, because to me, the power of the word, of the video, of television at the time, and this was in 1990, that was power to me. And then I ended up doing technology, media, and telecom investment banking after school. And then that's when the Netscape IPO happened in 1995. And the first time I logged into the internet, which was slightly before that, I was just so, to me, it meant like we could finally do all these things that I've been writing about, that my college essays were about, is this more instant connectivity that could help, in development. And I believe, and I've always believed, that everyone has gifts, and it's a matter of finding how each person can contribute best to the world in a way that also gives them an ability to make a living. And so that was the perspective I brought to the internet. And so to me, it was like a given that this kind of had to take off and would. Now in the United States, we had, and this is very similar to Bitcoin and financial services. Back then we had TV, we had telephone connectivity, we had things that people in India and Africa and Latin America didn't necessarily have. Right. So I think it took longer for people in the United States to understand that the potential of a lot of this, and a lot of the early business models were built on things like e-commerce, which wasn't feasible with the dial-up connectivity. And so for me, it was just thinking about the future that I wanted to see and I thought was possible. And then there were just so many smart people involved with it. And that was the same thing with, crypto in 2013. Just the energy and the passion for the people who were early adopters, who were the technologists, who wanted to see a better world out of all of this. Right. That's what ultimately clinched it for me, because when you see that kind of passion, you realize, that this really can't be stopped. Now, you don't know the timing of it, but it can't be stopped.
Got it. Did it pan out the way that you imagined it? Like, we all have visions for, when I say we, my generation is kind of saw the boom that cryptocurrencies are having right now. And we have a vision for what it would be in 5 or 10 years from now. I'm sure you had the same when you experienced the internet first. Did it pan out the way that you thought, or were there different things that you had in mind, and it, the ecosystem grew differently?
Well, one of the things I always have to remind myself, to this day, after all these years of investment experience, is that you can't assume that the rest of the world is thinking the same way or sees the same potential. And this is true of any entrepreneur that is starting off a business. And every large company that's been worth billions of dollars has gone through challenging times when investors, potential employees, whoever it is, about 99% of the people around them did not believe that this could actually happen, or that vision of the world could actually happen. Like, there's stories of Airbnb and Uber. Would you really stay in a stranger's home, or would you actually get into a stranger's car? And there's just thousands, millions of stories like that out there. Yes. So it does take longer. I think when you can see it clearly, it's so obvious, but you have to take a step back and realize, most of the world kind of goes along with the status quo. and are reasonably okay with the status quo, or are too busy to think about what could be the alternatives, or don't, just are, it's not their job to think about the alternatives. And so I strongly believe that like resilience is an important part of being an entrepreneur or an early stage investor. And yeah, I mean, and there are always, unpredicted things that come up, whether it's at the company level, with teams, or whether it's at the macro level. And what happened with the dot-com boom and bust, and the crypto boom and bust, we've been through several now, is the speculators come in. There are people who aren't necessarily bought into that long-term vision, but want to make some money, in the shorter term off of all of this. And that's one thing I learned, during that dot-com phase, was that, there are speculators, and it's okay. And they'll come and they'll go. But the people building are going to be around, and there will be massive, massive companies that are going to have tremendous impact that will be built. And so that was my key takeaway from that. And changing consumer behavior, changing any human behavior takes some time. And you need to build products and services that are user friendly. I mean, with the internet early days, I remember showing it to my parents, showing email to my parents, or even the bankers I worked with who were not in the tech group. And they would just say, why would I do that if I can just pick up the phone and call someone? Right. And people said that about banking, about Bitcoin. Why would I go through that when I can just use a credit card? Well, a large percentage of the world's population doesn't have credit cards, and will never have credit cards, and won't, just like they never had landlines. So I think it's that global perspective also that's more important than ever, if you're an investor or an entrepreneur.
Interesting. You've been consistently in some form of investing, either as a banker or as a venture capitalist. Was investing specifically something that you were interested in through your exposure to economics in college? And what sort of exposures led you to VC specifically? And I have a couple of follow-up questions from there as well, but I'm curious to know, like, is this something that you know exists and gravitate towards that as an interest, or is it something that happens to you?
It's funny. People ask me all the time, how did you end up being a VC? I mean, when I was in college, I didn't even know what a VC was. When I was a banker, I was working 100+ hour weeks. I didn't know what VC really was either. And what I've always done is just followed my passion and like the guiding lights. And, I've mentioned a few of those. One was this desire to create more educational opportunities, more development, allow people to reach their full potential. And while that seems very far away from some of the things I may do now, it's all connected. So after banking, so I started off at Lehman right after their IPO, which was actually a very exciting time to be there in the mid-90s. And I was in New York and London, and then I got recruited by Broadview, which was one of the first banks to focus on technology, like mid-market technology. And they were later bought out by Jefferies. And so I worked with smaller tech companies, and worked on a private placement of an interactive television company. And this was in 1996, and this was in London. And London was, the UK was ahead on interactive television because their networks were more upgraded than what was in the US. And so worked on some really interesting earlier stage deals, and became really very fascinated by the entrepreneur journey and funding the entrepreneur journey and looking at technology further out than I did, when I was a banker, when it was more transactional. I came back to the US. I was on the launch team of a startup that distributed financial research online. So it was very Web 1.0, would actually sit there and code directly. and I love that operational piece, but I missed the investment side. I ended up going to business school at Kellogg, and we had a tech conference. And at one of those conferences, I sat next to one of the senior investors at Intel Capital. And I told him about my journey, and he recruited me to join Intel Capital. So it was one of those things where, I hadn't necessarily planned on moving out to the Valley right after business school. And, I'd heard venture is so hard to break into. But it was just me talking about what I was passionate about, and also kind of getting the experience along the way that helped hone that. And that's how, and I've been a VC ever since.
No looking back since then. Huh?
Yeah.
Well, this is interesting, right? There's a huge conversation around diversity at this point, and one of the most underrepresented places is VC. And I think last I checked, it went down to as bad as 6% of all VCs were women, and I think it kind of recovered back to like a minuscule 9% after that.
I would say the number is even lower for check writers of partners who actually have check writing ability.
Yes, that is true as well. The point where I was getting at is that some part of that that underrepresentation can be attributed to prejudice. And I'm curious to know, I mean, especially when the conversation around diversity wasn't strong enough, what were some of those things that you knew were systemically wrong in the way in which VC was structured, and how much of it has changed over the years? Because I think you will have a very insider's perspective given the time that you've spent doing this.
Absolutely. I mean, it's changed tremendously. And I always tell I've spent a lot of time mentoring younger VCs, both men and women. And I'd say just the awareness that the men have too of this issue, and the fact that you're asking me that question, I think it's very much a generational shift that just didn't exist even, I'd say, 5 or 6 years ago. So when I started out at Intel, I actually believed that the Valley was a meritocracy back then. And I don't know whether it was really, but I was at the Intel that Andy Grove was still at. I mean, it's like kind of legendary, and it was all true that he had a cubicle. You rode the elevator with him. He was on my investment committee. So there's a lot of interaction with folks that just really cared about your mind, and so in a lot of ways, I was really lucky to start off at a place like that in the Valley. But it became very apparent very quickly as I interacted. And it was really not with the entrepreneurs. It was really with other VCs. As I went to other firms, I realized my point of view was just so different. And it goes back to being an immigrant, being a woman, being someone of color, when really there weren't any in most VC firms. If there were women there, they were white women, and so it really didn't bother me until I realized it was really restricting what was getting funded. I mean, it was obviously restricting my career in terms of my ability to be heard, and really see the opportunities. I mean, if you look at emerging markets, right? I mean, I remember sitting in a board meeting once, and one of our portfolio companies, and this is, it wasn't at Intel, it was at another place I was at, and the entrepreneur saw opportunity in London and was told, well, we don't want to go international yet, and that was, to me, I mean, London to me, okay, that's outside of the US, but it's a pretty developed market, right? And it was just because the board just didn't have familiarity with doing business in London, where, I lived there, and to me that was, not challenging. And so it was things like that. And I always say it's like 1,000 cuts, right? It's so many little things. I mean, it's outward sexism that you hear, or that you experience personally. And then it's little things like that, which make you realize, wow, I'm really different and I have a different perspective. And I just thought, I don't want to tie my career to people who are living in the past or who have perspectives that are not the future. Now, they may know about technology, but tech is one piece of it. It's also, as we talked about, adoption.
Yes.
How well do you know the markets and the opportunities? It's not just markets, but helping the entrepreneurs see new opportunities and being a thought partner with them. And the more entrepreneurs I talked to, the more I realized that they wanted that. They wanted funds with different perspectives. And so I got to the point where I decided, I either leave the industry or I actually start a fund from the ground up where these perspectives are just part of the DNA. I mean, we talk about diversity now. I don't, diversity. I've been writing about this since 2008. I've been, I live and breathe it. I don't, and I attract entrepreneurs that live and breathe it, even if it's an all male team. They appreciate the perspective that I'm bringing. So diversity is a different perspective as well as what you look like. And I've always viewed it that way. And it's been really exciting to see entrepreneurs, react to our DNA and how different it is. And, we now have 8 years of this track record of showing that we can attract some of the best entrepreneurs in the world, and so I think that part of that thesis has proven out really well, and I'm just so happy that attention is being paid to it. And I'd say the limited partner landscape, they need to pay attention to it. I've had emails from firemen, in the middle of California who saw me speak somewhere, online, and have emailed me and said, "Can I invest in your fund? We're part of a pension group, but if I look at their investments, they're not reflecting the world around us." And it wasn't only that; it's that they liked what we were investing in. So that when you hear from the ground up of like people who are putting their money in these pensions, and yet they know that those aren't necessarily the best stewards of their money, that's when you realize there's a problem out here, and money is being left on the table, and it does impact the person on the ground who's working hard every day.
Right. I really appreciate that perspective, because and I'm so glad that you kind of spoke of diversity as more than just the way you look, and I really think that needs to permeate through more organizations, and I see it happening, but not enough. Um, at, on the question of capital and what it should be doing, there was this talk by the founder of Social Capital, Chamath Palihapitiya, and he said that there was less than a 2% correlation between VCs who participated in the growth of the top 50 companies in the US, people who kind of gone 50-60 billion dollars in market cap over the last 20 years. And he alluded to the fact that VC is not a very good allocator of capital. What are your thoughts on that? And how has that, given that there are so many more deals and so many more entrepreneurs coming to the table right now, do you think that's made the problem better, or is it getting worse?
Yeah, I mean, we're definitely seeing that there's a flight to safety that's happened, especially during 2020, at that later stage, right? Where the companies that are doing well, or the ones that, certain VCs decide they want to keep backing, are the ones that are raising these mega rounds and going public. I mean, this has been almost, I don't know if it's quite a record year, but almost a record year for tech IPOs.
Yeah.
And so, but we're still also seeing a lot of activity at the early stages, because there's just so much capital out there that is looking to invest. Now, Like, I think VC is not for everybody, and that startup that I was a part of in 1997, we never went for VC funding, and the company's still around and has grown. And I think entrepreneurs need to really think deeply if they want to take venture capital, because at the end of the day, venture capitalists need to return money to their investors. And I'm a fiduciary to my limited partners, and I always have that conversation with entrepreneurs that I need to see that you can 10x this company, and not only that I can see that, but that you want to do that, because it's not. I mean, it may sound crazy, but it's not for everybody. And you can have a nice life, you can have an impact without necessarily doing that. And so I'd say that that's important for entrepreneurs to know. And the other thing I'm excited about, I mean, we've seen crowdfunding, but one of the reasons I was very interested in crypto from the early days is the opportunity to be able to raise capital from potentially your users, your user base, and have more alternatives other than venture. And that may sound crazy because I'm a VC, but I care about entrepreneurs and I care about impactful companies. And I know there will always be great ones for me as a VC to engage with and invest in. But I also know that there's a lot of other companies that I can't fund, or that may do better having other alternative funding models. And so I think the concept of crypto is very exciting from that perspective, and provides greater potential access to capital.
Would you say that investing in general has become better? Are the hit rates going up, or do you think that because of the number of companies out there, it's actually worse than what it was before?
When you're asking about hit rates, are you talking about how many companies within? Yeah. So, I think every investor has a different strategy around how they build their portfolio. We are very thesis driven, and get very involved. I mean, I have a huge network worldwide. For me, one of our competitive advantages to our portfolio, and why they would want our money and partner with us, is that we can multiply what they could do on their own, and that's largely through our network. So we invest in 25 to 30 companies per fund, and we do a fair amount of diligence. Even if it's an early stage company, we want to spend time with the entrepreneur, get to know them, get to know the way they think, their decision making, what their goals are for the future. And there are other funds that will just invest in hundreds of startups and say, well, that way we'll know which one. Some of them will be winners. The problem with that is that you won't necessarily get the ownership for it to impact. You need more of those if you're putting in smaller dollars to do well. I mean, one of the reasons I also started our fund was that if I look back upon my portfolio over the years, we've had higher, than that 30% hit rate that that VCs often talk about. And I think it's the way we go about and invest. Now, nothing's ever a sure thing. And often, companies that you think are going to be successful aren't. And there's so many factors that go, again, from the entrepreneur and their personal situation to macro events. And then there are other companies that are, on their last legs that, and I know a number of these that, because of COVID had a big boon because, their business models and their products were more in demand than before. So I think that's why it's important to look at diversification for a VC, for any investor. And so that's really the way we think about building the portfolio. I'm more excited than ever about tech and its impact, and the entrepreneurs that are building companies. I think that's just going to continue to accelerate. The fact that we now have entrepreneurs from around the world, who are thinking, working on open source platforms, and thinking about building impactful companies in their home markets. So this is really a golden age, I think, for tech entrepreneurship, and I'm really excited about the next 5 to 10 years.
I see this genuine empathy that you have for entrepreneurs, and the fact that you're very entrepreneur first, as opposed to the other conversations that I've had where it's a lot more macro trends and markets driven approach. A lot of my compatriots who are entrepreneurs at this moment, I tend to have a bias towards investors who've also done tech startups. They this could be anecdotal, but they believe that those investors are a lot better. Clearly, in your case, and I've seen your portfolio across the places, and there's it's as good a portfolio as anybody else's, and that doesn't apply to you. But have you thought of that, having gone through that entrepreneur's journey yourself? And do you think that that would have added value to you as an investor today, or do you think that that's not necessarily required?
Well, I don't think it's required. I think it's definitely a different perspective and level of empathy that an entrepreneur turned VC can provide. I would just say that I've talked to a lot of entrepreneurs turned VC who end up going back to an operating role, because it is very different, building a portfolio versus being kind of all in one company, and rolling up your sleeves. And I do roll up my sleeves, but not on a day-to-day basis for each company. I mean, there are cycles of when companies need more help and more time, and I'm constantly making intros for them, but they're building day to day. So I think a lot of people say they want to be VC, especially entrepreneurs, and then they get into it and they realize, well, this isn't as much fun for me as when I was building a company. And for me, I did have a stint as an entrepreneur at a company that has been successful, but I enjoy that higher level overview of and that perspective I can bring to the company. And it's years of seeing companies do well, go under in different market conditions. It's this network. Being an investor, you just like, every portfolio company has employees you interact with and other investors. And so really this multiplier effect on the network. And that's why it was important for me when I launched Future Perfect that we had a portfolio where we that was manageable enough that we could bring all of that to the table, which is different, and I think complementary to a VC that may have been an operator or have more operating experience. But it's certainly not something that comes up. I think with entrepreneurs, they want capital that is a partnership, especially at the early stages, like where they know you're on their side, and I think that empathy is there from having seen so many entrepreneurs. And frankly, I'm an entrepreneur myself with this fund, so I've gone through most of the trials and tribulations that any entrepreneur does.
I think being a woman also has something to do with the empathy that you have for other people. I think you shouldn't discount that either. You've been a VC at a pure play venture firm, a multinational company. You were also at the Omidyar network, which is more social enterprise driven. How does investing change across all of these places? Because at least say a Qualcomm fund or Samsung's venture fund isn't necessarily looking for an exit. They're looking for IP that they can acquire. And I would think that those objectives are different in different places. So how are they different, and which one of these changes was difficult for you to adapt to?
Yeah, it's been quite a journey. A lot of people say, why did you go to Intel in '99 instead of a traditional VC fund? And if Intel, has been a great technology company, and an important part of the Valley for so long, and also has a venture arm that was one of the first amongst corporates, and so it was a great place and time to really cut my teeth in venture at Intel. They are a strategic investor, so every deal we did back then, and this has changed over time, but back then had to be affiliated with a business unit. And so I love that dual role of not only investing in the companies, but then shepherding them through business development and sales internally. And that really helped me learn the way a large technology company actually operates. And then you go through to Omidyar, which was right before I started my fund. And it was just a phenomenal place. I was running venture and emerging, mobile and emerging markets, so the venture deals for them. And so invested in places like the Philippines and East Africa and Ghana and India. And so really kind of expanded that network globally in a lot of more frontier markets, these really emerging economies where mobile was such an important part of their growth and infrastructure.
Right.
And so each place, and certainly there we tracked social metrics and impact. And at the more traditional funds I was at, it was pure financial returns. Intel was a combination of the financial as well as the strategic impact. So it was great to see all these different models at work. And what I came to the conclusion that I wanted to do was focus on the financials, but invest in entrepreneurs who cared about that social impact and who didn't find that there were enough investors that supported them in the journey to do both. And I believed that there were enough of those entrepreneurs out there. And I think we're seeing more and more, and again, a generational shift. Or I'm hearing from entrepreneurs I invested in 20 years ago who are now ready to jump back in and are excited by crypto and potential impact that these blockchain business models can have. And so that's exciting to me, and that's what's exciting about being older in this very youthful industry is it keeps me very young, or at least I hope. And the second is seeing these cycles and these relationships and these entrepreneurs where age just doesn't matter. It's really outlook and opportunity that people see.
I'm so glad you brought up the social metrics right now. In fact, now I'm looking at people use social metrics as a multiplier for their success, as opposed to a discount on return expectations because they're in social enterprise. So I'm very bullish about that in India specifically, which is it's riddled with problems, and I think problems that can only be solved by startup mindset, that enterprise approach to solving them. So
yeah, and really technology can enable scale, right? I've done work in microfinance and on the side and between right before I started at Intel. I lived in Dar es Salaam working on a UNDP project. And kind of pro bono, and was setting up microfinance relationships for some of the local female entrepreneurs. There's a lot of great work that's been done, but then you think about the impact that mobile and things like crypto and APIs can have in terms of scaling some of these programs. And so I've always believed that the emerging markets are going to show the future business models, and we've already seen that happen from China, and we're seeing that from India, and so and it's really just knowing what the problems are on the ground and marrying it with the latest technology, and then finding the right investors to support that mission. And I think those are going to be the big winners, even from a financial standpoint.
Understood. You told me how you saw the parallels between crypto and the internet
Mhm.
back then. I'm what's the best way to put this? You're pretty vocal about the fact that you would know that crypto has succeeded or blockchain has succeeded when you cease to know that it exists. Like it's been very well abstracted. Um, it's happened with cloud, it's happened with the internet, it's happened with mobility. It's all like kind of stitched into our fabric of living today. Um, Blockchain's still a while away before that happens, for whatever reason. What are those reasons in your mind? Like what do we have to overcome before blockchains as well become a part of our daily lives, and it almost becomes incidental and not something that just kind of sticks out the way it does today?
Yeah, I think part of the challenges that crypto and blockchain have had is the internet exists, right? And so everyone has an opinion on it. Like, yeah, I say the internet didn't exist when the internet emerged, or people weren't on it. So the questions I get from investors or people who aren't believers say, but it doesn't scale, it doesn't do that. Well, the internet didn't scale in its early days. It didn't, and so there's so much information out there, and so the technology is being built out in the open, and no technology is miraculous, right? And needs time to scale and find what the right business models are for the users. And so I think we're getting there. I mean, we have a company in our portfolio that is using blockchain kind of behind the scenes along with other technologies to connect multi-cloud databases, and has run a pilot with the company that uh, 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 basically reconciles all of the tickets for airlines, and there's all this code sharing that happens, and it can take weeks for airlines to pay each other and figure out what audit all of the transactions, and this company Vendia has been able to bring that down to a few hours, and so it is working behind the scenes because they're not out there talking about blockchain per se. They're talking about a solution, and you realize when you're out there that so much hasn't even been digitized yet. There's a lot that still operates on fax, or I mean, trade finance is another example. A lot of things that are cross border. There have been these silo databases that have been built up. So while I'm a believer in public blockchains, and eventually connecting public and private databases, I think there's a lot that's happening on the private blockchain side that I believe will also connect into the public blockchains once they're ready, ready for more scale. So I do think it's happening, and certainly, we're seeing the growth of Bitcoin as an asset, and that really, I mean, Bitcoin is powered by blockchain tech. So, I view it as already being proven and out there. It just needs to scale and figure out, where it can be most applicable, for each phase of scale.
Right. I'm so glad that you brought up some enterprise use cases, which was my next question. And on the point of things that could have been done, I really thought that the current U.S. elections, especially with this whole question about fraud going around everywhere, that was a perfect place for blockchain to shine. And I've been watching Christopher Krebs's interviews, and it's like, why paper ballots? You could have just used a blockchain there. But
Well, yeah, and that was one of the first use cases I looked at in 2014. And the challenge in the U.S. is voting is municipal based, and so getting buy-in from each municipality, and then having that verified, across the country, I think that's been one of the biggest roadblocks. Certainly, there's been a lot of talk about it subsequently. And we'll see, maybe this was the impetus that we needed, because now there was a lot more, mail-in voting. I'm sure people outside of the US are trying to figure, why can't we get our act together on counting ballots, or why are we still counting them by hand? But that's the legacy infrastructure that exists. And it is, state-based, city-based, county-based. So those are all the roadblocks you look at, the barriers to entry, because the technology would be great, but it's, can we overcome these barriers, and can the entrepreneurs overcome these barriers to get a product at scale out there?
On the topic of enterprise use cases, and not enterprise blockchain specifically, but enterprise use cases, you said that, and this was in a panel that we had a couple of months ago, you said that there are too many legacy systems that are just about good enough. And, using new age decentralized tech to get those gains has too much of a switching cost for enterprises to, kind of start afresh. What are those inflection points that you're looking for in enterprise blockchain space before this becomes a norm? And what are the things that we are going to have to overcome? I really like that reconciliation example that you gave. There's a company in India called Coiner that does something similar with invoicing on supply chains, and it creates this beautiful digital twin for supply chains as well. And that was a great enterprise use case that was far better than what exists right now. But most systems, like you rightly pointed out, are just about good enough. What are those inflection points that you're looking for before you can go all guns blazing into enterprise blockchain as an investor?
Yeah, I think it's really talking to potential customers of the technology, right? And that's where this network this network I've built up over the years. And when I was at Intel Capital, I did a lot of enterprise software investing, and that was the transition from mainframe to web, and so looked at a lot of supply chain management, demand management, these middleware companies that were connecting databases. And it's so interesting because so much of that is coming back around blockchain technology. And so it's a very similar kind of analysis of whether or not a customer is even talking to these potential portfolio companies. I mean, do they see pain points, and what is their buying cycle and buying process, and so just understanding where this technology could play. And it's much easier now than it was before, because there's more interoperability with systems, so they don't necessarily have to rip out an existing, say, SAP system and replace it. And so we're finding that there is a willingness to pilot and work with startups, but there has to be that pain point. And we've seen a lot of pain points emerge during COVID. I mean, just in terms of supply chain provenance, right? Around PPEs and making sure that they were from the source they said they were. And so there's been a lot more interest, I'd say, because we've seen some of these pain points with existing systems, or just the time lag of being able to track an item or pay, right? I mean, the fact that invoices can be outstanding for 60 days versus, figuring out which customers, are good to pay sooner than that and get a discount on terms. And so all of this, there's just so much that we've seen where blockchain can play a role. But I'd say, it's blockchain tech along with other technologies, and it's a holistic solution. I think the entrepreneurs that go in understanding that and knowing who their partners could be to in the enterprise are the ones that are the most successful at this point in time.
Understood. I think that's really valuable. In your portfolio, we kind of spoke about it. The two companies that really stood out to me are perhaps few of the most consequential companies in crypto today. One is blockchain.com, and the other is Blockstream. Talk us through how you got in on those deals, and this was, I would assume, early days.
14.
Yeah.
We were first money into both of those
Yeah.
companies.
I mean, that's ridiculous, right? Like, how do you, what made you commit in both cases? And, now quite honestly, both of them have panned out beautifully. But, what made you commit back then when the future wasn't as clear as it is now?
Yeah, sometimes when I look back on, investments I make really early, I just think about, I can't believe it myself in terms of the risks. But that's really, I mean, that's what compels you to actually write that check, right? Is when you have bought into the vision that the entrepreneur is bringing to you, and that you have confidence in that entrepreneur's ability to execute, because you're not going to be there day to day next to them. And so 2014 was a really, I mean, this is an exciting time now. It's just very different. I mean, that those were days when, all the conferences were, like 100 people or less. We had these Bitcoin supper clubs of like 13 to 20 people. Everybody knew each other. And you really got to know entrepreneurs well. And both of those companies were around for a while before they took their first money. And a while is, a few years, but they were really folks who were passionate and knowledgeable about the sector, knew what needed to be built, and they were, blockchain was like really the first wallet out there, and the first information feed, right, for the Bitcoin blockchain. And but if you believe that this sector was going to go somewhere, you knew that was an essential part of the infrastructure. And then you were making, you're saying, well, this is the team that, I really like and believe that, you know, anytime you invest that early, not only in a company's evolution, but in a sector's evolution, so it's like a double risk, right? You want to make sure that that is a resilient, passionate entrepreneur who also knows when they need to reach out, and can also be capital efficient, because and we experienced this. There was the, I'd say, 2014 to 2017, nobody knew about the sector, or other than the folks who are really into it. I'd say most VCs thought I was crazy. Most of my colleagues thought I was crazy for putting so much of our thesis into this sector. And then 2017 happened, and then it was this big boom, and then it was a quick bust. And so that's not easy for an entrepreneur to manage, and on both sides of the equation. So because they're building slow, they're building, not getting ahead of themselves, and then all of a sudden there's this boom, and everyone's working around the clock, and then there's this bust. So just getting to know entrepreneurs and understanding that they had the wherewithal. And again, you're not always 100% right, but those were two instances where that was absolutely essential. And they had the respect of technologists in the space, which was also very important given what they're building out.
I mean, even today, Blockstream talks about beaming Bitcoin transactions
Yeah.
through satellite. That's just,
That's the thing, right? In terms of alignment with values, right? We want this technology to be accessible. We want, a farmer, in the middle of the Congo, if he or she wants to access their Bitcoin wallet, or buy something, and whether it's Bitcoin or other crypto, they're enabling that infrastructure to make it happen. And so that was key to us. And in the case of blockchain, I mean, they're in the UK. They were really the first to think globally about the sector, in terms of wallets and infrastructure. So yeah, and I helped them with their New York office and recruiting when they launched in New York, and so that's where it's really great to be that engaged and helpful to companies as they grow.
awesome. And what companies you've kind of backed, it goes to show your vision for the future. And I'm kind of amazed with your picks back then. You were in the same panel that we had a couple of months back. One of the things that stood out to me is that you come from the traditional uh, technology investing space, and you were looking at potential of blockchain kind of, you know, mixing with other traditional technologies like AI, IoT, and
Mhm.
building better solutions. Um, but today, if you look at it, Bitcoin and maybe DeFi seems to be the thing that's getting closer and closer to mass adoption. And at least the use case is very clear, and the user experience is getting better at a frighteningly fast pace.
Mhm.
Have these trends somehow changed your blockchain investment thesis, or do you still remain the same as to how it was in the early days?
Well, I still think that, well, if you look at smart contracts, like AI and machine learning are an important piece of building out smart contracts and more intelligent smart contracts. And smart contracts are a big part of DeFi, right? So to me, it's all interconnected. And then you look at IoT, and there machines are going to have to kind of transact with each other, and that will happen through smart contracts. And then you go back to that AI piece. So it to me is all kind of interrelated. We've always said that we thought finance was going to be the first sector where there's going to be disruption. And we've certainly seen that happen. And what I'm really excited about, and when you talk about predictions, like I thought tokenization would take a little bit longer to take hold, and it really, I think it's just happening quicker and quicker, and the technology that's being built out. I mean, we're finally seeing some of these chains, come out of testnet, go to mainnet, and all the business models still have to be figured out, but that's where I think the next few years are really exciting for figuring out what the applications are going to be. And so we very much followed the infrastructure, middleware, and then application model of investing, which is a traditional tech way of looking at it. But that's how my mind thought about the way we built our portfolio, which is why we didn't invest in a lot of applications in 2014, because it was like investing in, a pets e-commerce startup, or Cosmo, right? The delivery service in the late 90s. The infrastructure wasn't built out to support those applications. So we'll see the same thing that, we had micropayments. I mean, we had early credit card companies, Bitcoin rewards credit card companies, try to get launched in 2014, but now they're having successful launches. So it's really about timing it correctly too, and making sure you don't get too enamored with just the technology, but you also get the timing right.
Right. I appreciate that perspective. Uh, you know, you also spoke about how your targets of LPs back in the day used to be people who were sold into the vision of the space and its potential, and almost it was almost a taboo word. You wouldn't put crypto and venture investing in the same sentence until more recently. Clearly, times have changed now, and with enterprises buying Bitcoin as a part of their treasury, it seems to have kind of given Bitcoin and thereby extended out to crypto a sense of credibility. Do you find that your conversations with potential LPs now changing, or is it still more of the same?
Oh, absolutely. I think this year has been very pivotal. And it's a lot of these hedge funds like Paul Tudor Jones, and others who have come out and said, they have invested in Bitcoin or Bitcoin futures, and have built a portfolio. You mentioned MicroStrategy, Square also has invested part of its treasury into Bitcoin. So that has really gained the attention of a lot of more traditional investors in the finance world, and companies. I mean, I spoke to a group of treasurers, corporate treasurers 3 years ago, at a dinner, and none of them, I mean, they had heard about Bitcoin and crypto because of the big boom back then, but didn't know how it was relevant to what they were doing. I looked at it as both an asset class, but then also the underlying technology, and broke it down. And I've actually had, just in the last week, several folks that were in that group reach back out to me, and so um, often it felt like a thankless job going out there and evangelizing Bitcoin and blockchain tech. But I think there's been an awareness this year, both as an asset class, and then I think, some of the underlying technology, both of those. And it's really, I think 2021 is going to be, a phenomenal year on both fronts. And we're gearing up for that.
Yep. Everyone is gearing up for that at the moment. Jalat, the other thing that I wanted to ask you was about ICOs in general. I've seen that you've a lot of the deals that at least are publicly available seem to be equity deals that you took onto them. But when done right, an ICO is an investor's dream, and especially with Uniswap right now, it seems like you're forced to build your product, build your community, then tokenize, and then go public. It seems a little more realistic and good for the ecosystem.
Yeah.
Do what's your general experience with ICOs been, and do you see this coming back in a big way in the coming years? Because it is a disruption in fundraising. The way you were.
Absolutely. I think the challenge before was that companies were issuing ICOs, without proper regulatory guidance, which we have a lot more of these days, but also without lockups. And the challenge of not having a lockup is that you're attracting speculators who just want to flip the coin, which leads to a lot of not only capital loss, or a challenge on capital management for an entrepreneur that's trying to build technology that's going to be around for a while, but it's also like just mind share of the team. I mean, when I invest in a really early stage startup, they raise the capital and then they focus on building. And what was happening with a lot of these is they didn't have time to focus on the building. They were, having to hire people for Telegram channels to manage their investors to make sure they didn't sell, or they're spending, millions of dollars on legal fees trying to impact, what the SEC was going to rule. So that was something we just didn't want to be a part of. I looked at, been there, done that in the late 90s, and so. But I've always been very vocal about the fact that I believe in tokenization, and I believe that there's a beauty in being able to kind of bootstrap your product with the right partners and user base and developers if you get that mix right. And so I think that we've seen a maturation of these token models. You still saw speculation in DeFi over the summer, but that's never going to go away. It's about structuring the token sales in a way where you're incentivizing the right behavior for what you want to achieve in the long term.
Right. Yeah, I'm a big fan of more autonomy to the entrepreneur and the community coming together, and the community owning the product as well. But back in 2017, it was just I want to raise a $20 million raise, and that's why I'm doing an ICO. It's like, no, that's not why you do an ICO. I'm really glad that it's changing, and I'm glad that you're seeing it that way as well. Because as a VC, I would think that would scare you a little bit, because that's an investable company that's now has.
Well, like if you're entrepreneur first and technology first, like I said, there are plenty of opportunity. Look, we can participate in those. It's like public market investors. They're investing after a company has IPO'd, but there's still upside if you're picking the right ones. And meanwhile, it's not going to be the right model for every company. And we certainly see enough companies raising equity. We see, we have a mixture of equity plus tokens tokens where we're helping them figure out the right token model, and we also hold some tokens. So, for me, it wouldn't be any fun to be an early stage tech investor and not, see the opportunity in this for us too.
Right. Well, I've had a great time. I didn't even know the hour just go by. But my last question to you is about something that you've spoken with us earlier, where you said that you believe that India was the next frontier for crypto and blockchain. Your compatriots, whom I've been speaking with, they say that look, you've got to be global first, even if you're building from India. Uh,
Mhm.
and I'm trying to collect as many opinions as possible from venture capitalists for Indian founders building crypto products.
Mhm.
What would those do's and don'ts be, according to you, to an Indian entrepreneur looking at the crypto opportunity and building a global product?
Yeah, I think being aware of regulation globally and who else is building similar products is important. I think there's going to be a combination of certainly the local market there is large enough. You look at the fintech market there and the number of companies that have emerged in fintech across the spectrum. There's been substantial opportunity. So but I do think that this is inherently a global sector, right? There's opportunity to build companies that cross borders, and given that there is still a lot of regulatory uncertainty globally, I think it makes sense to build products that can not only serve a local market but can be used in other markets as infrastructure, right? So if you're building a wallet that has better key management, right, that can be used outside of India as well as within India. But having that option, and that's where I think Indian entrepreneurs can really excel too, is the technology skills that exist, right? And so much of this is about cutting edge technology as well as product market fit. But you certainly you can get to scale, or you can test it out with a significant user base there, right? And in a way that you can't in other markets. But then you can also build something that's scalable because of the tech talent. So I think it represents kind of the best of both worlds if supported appropriately. But regulation is important to keep track of. And that's where we also, as an investor in the space, I mean, we're very much talking to regulators all the time and on top of what's happening there, because that's some value we can add back to the entrepreneur.
Right. So, Jalak, are you also looking at India as a space to be investing in the coming years?
Yes,
There's
yes, absolutely. So entrepreneurs there, feel free to reach out.
Sure, I will make some introductions in that case. But Jalak, it's been a blast. Thank you so much for doing this. This will be out in a couple of weeks, and I'll hit you up when it is.
Okay, thank you. Thanks for having me. Good to chat.